But first, many Americans thinking about their retirement use a 401k retirement plan to invest for their golden years. But with inflation still high, lots of people have questions as to how do they best decide how to allocate funds toward their 401k. So joining me now to help is Michelle Schneider, partner and director of trading, research, and education from MarketGauge.com. Michelle, welcome.
Hi, nice to be here, Kristen.
It's wonderful to have you on set here. Of course, 401k is a very popular topic. What goes into deciding whether a 401k is right for you?
Well, one of the biggest factors, of course, would be age. So if you're a baby boomer, most likely at that point, you have a level of security, and your biggest concern is going to be the legacy, what you're going to leave for your kids and your grandkids. In which case, most of the baby boomers that we talk to, they like a blended portfolio at this point with some fixed income, especially short duration. They like some exposure to, obviously, some stocks. And right now, a lot of people are also switching to commodities, which is something they haven't necessarily been involved with, but they've really become in vogue. If you're a younger person, a lot of younger people have become more active in terms of their own management of portfolio, which is excellent, and we highly recommend that. But also, they are looking for liquidity here, and liquidity through free money, which we're basically getting at this point through these short duration bonds at these high interest rates.
Mm-hmm. How should people go about managing their 401k in this environment?
Well, for one, you definitely want, if you can get it, a self-directed option. We know that we have a lot of financial planners and RIAs that are our clients, as we have an asset management company. And so in essence, if you're not going to do a self-directed option, then you want a financial planner who at least has a sense of what's going on in the market and can be somewhat flexible in this type of environment. The other thing is you want to be careful for target date type 401s because they are heavy into equities and fixed income, and they really don't give you any type of other exposure. So you are stuck there.
Okay, good. So for our viewers watching, check out for that term, target date might not be the best option for you. So we spoke a little bit earlier, Michelle, you referenced the sort of investments that people are interested in these days, increasingly commodities to some extent. How do you create that strategy to decide which asset allocations work?
Well, again, I think it's important for you to be somewhat aware of the changing market. But the overall theme, really since COVID, has been rising inflation and rising interest rates. So that should be your number one concern in terms of the management of your money in a 401. So you might want to have, say, 10 to 15% exposure in gold. Gold is a safety play. It's a valuable asset. And right now, obviously, gold is very attractive because of all the geopolitical uncertainty we have and is rising in the face of higher interest rates. The second thing that you really want in terms of exposure to commodities would probably be looking at some of the broader types of ETFs that you can actually trade easily in an account. DBC, which gives you exposure to oil and metals. DBA, which gives you exposure to a lot of the agriculturals and softs. Because just in case things get dicier, which at this point is very possible, those commodities will also rise. This is exactly what happened in the late 70s.
So it sounds like for some people, set it and forget it might be an option that they choose, but more so these days in a complex world, active management is something that people are increasingly turning to. Are there any sorts of rules around actively managing your 401k?
Well, yeah, and I just want to, Kristen, reiterate why that's so important. If you look at the classic 60-40 portfolio for the last 2 years, they're down about 35%. And that's without including inflation. If you include inflation, many of these accounts are down 40, 50%. So passive investing has not been a good plan. And if you believe, as we do, that we can go into a stagflation environment, because we do still have, well, today, GDP numbers, right, shows that we have a strong economy in certain aspects, but we have others that are showing real fear of recession. That's the classic stagflation. Then basically, I would say take the free money. And I keep saying that because that really is the safest thing right now, is those 2-year, short duration type bonds. and look at maybe spring of 2025, I think, until we can start to see things sort of reorganize and maybe we muddle through all of this and we get into a point of a normalization, which is the Fed funds rate and also the inflation rate are kind of the same.
Yeah.
We're not going back to zero interest rates, so you don't even want that to happen.
So it sounds like another year and a half. Investors might be obviously considering this strategy.
Exactly. But if you have an opportunity to see how the market conditions change, then you can obviously be somewhat flexible, and that's why it's so important to have that self-directed.
If someone changes their jobs, they might be wondering, well, does the term 401k still apply to me? How do they transfer those funds perhaps out of their 401k if they do change jobs to make sure that they don't lose out on any money that they've made?
Well, I know that there are certain firms that will actually automatically transfer your 401k from one company to the next. But if you're just starting a job, let's say, or you never had a 401k before and now you do, essentially most companies will offer about 6 to 10% that they will contribute. And you want to double that with your own salary. So then you would contribute, let's say, another 5 to 10%, so that you would have about 20% allocated between company contribution and your contribution into it. And that's a generality, of course. It always is going to depend on your age, your needs. Do you have kids? What does your future look like, and what is it that you want to do with your future?
In the current environment, some people have had to at least consider or outright withdraw from their 401k just to get by amid high inflation and high borrowing costs. What should our viewers know about that if they need to turn to their 401k to get by?
Well, unfortunately, we have a statistic in this country that people can't even put together $400 in case of an emergency. So if you have a 401k, it should be the last resort because of the penalties. But clearly, if there's a choice between family and 401k penalty, I think most people would choose family. So, kind of rate your emergency status and try, as hard as it is, try to actually have those fixed incomes and maybe in different durations so that if you have to take some out, you won't be penalized.
Any final thoughts for our viewers, Michelle, when it comes to investing in a 401k?
I'd say probably, again, I think the most important thing is that a lot of financial planners tell people to sit. They think passive investing is still the way. And for many, many years it was. But that's not the case anymore. And a lot of people who are in this business don't understand that because they've never been in this environment before. But we are not going back down in interest rates. We're going to stay high, perhaps even higher. Obviously, you can see the check boxes that we have. So I would say the biggest thing is either self-direct or get an education and make sure you speak to your own financial planner to make sure that person knows what's going on.
All right, Michelle Schneider, live down here on the floor of the New York Stock Exchange. Michelle, thank you.
Thank you, Kristen.